This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 8th, 2016. Hope you had a good Labor Day long weekend. If you ever miss a radio show, like maybe last weekend, you can always find them on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. They're archived there. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. 1-800-432-1022. We also have a podcast. The podcast is through iTunes. Type in The World Financial Report on Radio. You can put us on your portable device, take us anywhere you go. We're also on YouTube with our own page and tune in. Our featured diamond of the week, and we will talk more about this in the second half of the show. This is very unique, something that we have never done before. A diamond that is a rough. It's a 2.00 carat rough fancy orange. And we will talk about this rough fancy orange coming up in the second half of the program. Since we talked to you last, it's been very interesting. We did talk about, on the last show, jobs numbers coming out on Friday. A poor number was expected. That did happen as well in the United States on Tuesday. The U.S. service industries expanded at the slowest pace in 6 years, and that dimmed prospects for the Federal Reserve to increase interest rates later this month. We saw the U.S. dollar fluctuate a little bit, Canadian dollar fluctuate a little bit. John Embry had a very interesting quote. He says, I continue to be amused by the ongoing propaganda about a potential rate hike in the United States. The only justification for this in my mind would be to support the U.S. dollar, which I believe remains very vulnerable. Now, I must admit that I laughed out loud when I saw Goldman Sachs' prediction that a rate hike for September had improved markedly, only to be followed by Dennis Gartman stating that a September rate hike is all but impossible. Given that both of these sources tend to be wrong much more often than they are right, it's hard to know what to believe. However, logic says that a rate hike in a weakening economy before an election seems highly unlikely. John Embry from Sprott Asset Management. And Harold, we did think, and we've been waiting for quite some time to see a rate increase, maybe one or two. We were promised 4. There was a rate increase at the end of last year. Now we've been waiting. I personally don't think at this point we're going to see anything until after the election. But I guess we'll have to wait and see what the Fed does in September. Maybe they will surprise us.
Well, the U.S. is the only country that can raise interest rate and more than likely will, again, and it will strengthen their dollar. But the fact is that, the elections are the elections, and it's one of the biggest events of the year. Obviously, there's going to be market movement based on, who's popular and who's leading in the polls and who's going to get in. And the closer we get to that, obviously, the more we'll be able to evaluate what the markets are going to do. Personally, I believe that if Hillary does get in, the markets will remain even, and the way that they are, the stock market is friendly towards Hillary because they're used to her. They know what to expect. 4 or 8 more years of the same government that we had with Obama. Not that it's great, but the fact is that the markets will remain about where they are. Okay, we're not going to see any tremendous volatility. Now, we'll have to see how Donald Trump really does. Last night, or on Wednesday night, actually, they had Hillary Clinton and Donald Trump in a forum, and both did very well. I was very surprised that Donald actually held his own and wasn't his normal obnoxious self. But, I know Donald Trump very well. I sit on the same board with him for the Susan G. Komen Breast Cancer Charity. I play golf at his country club, and I've had dinner with him a few times, and not that I'm a close friend, but I do know who he is, and the wealthy people in the United States like him. They like him a lot more than Hillary. So we're going to have to see how things go. This has been actually a very boring summer for the markets. The markets have traded in a range all summer long except for the one major event, which was Brexit, where you saw the British pound decline by 25% in one day, the markets have relatively traded within a range. Gold and silver certainly have. The oil market's been trading within a range, and I do expect these markets to break. But again, during the summertime, the markets were lethargic. There was no major news coming out except for Brexit that really would have affected the markets, and really the only market that did affect was the British pound, and it was substantial. I'm very bullish on the U.S. dollar. I believe that the U.S. dollar is going to continue to be the strong currency, and even if they don't raise interest rates, I mean, we're talking about a minuscule interest rate hike. We're not talking about them raising interest rates, by 3/4 or of a full point. You're talking about a quarter. But it's just the idea that they are able to do that will strengthen the U.S. dollar. There is no doubt in my mind that with all the problems in the world, in Europe, in Canada, in Asia, that most of the investment money is coming into the United States. The stock market is the most active. The commodity markets, again, right now are just trading in a range, but most of the volume of trading is done within the United States. So I believe most investment money will continue to come into the United States. It'll be cautious, especially with the elections coming up in November, but the bottom line is you want to have money in U.S. dollars. There is no doubt about that. It appears to me that oil is going to continue to fall. I think that oil is going to drop into the low 30s, and I do believe that the U.S. dollar is going to skyrocket. I think it's going to break par, and I do believe that we're going to be at 108 to 110 at a time when I believe the Canadian dollar is going to be at about 70 cents. That's a 50% difference between the Canadian and the U.S. dollar. My clients have been investing in U.S.-based dollar investments for the last 4 years. We've gotten a lot of money out of our Canadian dollar, even when the Canadian dollar was, weaker than it is right now, converted it to American, took the hit at that particular point, but the returns that we're seeing on our investments are spectacular. They're higher than anything in the industry because they're private deals. For example, Randy brought up at the beginning of the show, for the first time, we are showing a rough diamond. That is one of our major businesses. We are miners and cutters and polishers of some of the rarest green and orange diamonds in the world. And the diamond that we're showing this week is a phenomenon. It's a 2-carat, rough, uncut, vivid orange diamond that we believe is going to be cut to a VS1 or a VS2 clarity. It will be a diamond that will sell in the multi-millions of dollars. I wanted you to see what those diamonds look like because most people not only have never seen an orange diamond, but they've never seen an uncut rough orange diamond, and this diamond is vivid, and it is worth an absolute fortune. And these are the type of deals that we're allowing our clients to invest in with us. And the returns are substantial, and they're all in U.S. dollars. So we'll talk about that later in the show. At this particular point, again, the markets have traded in a range. I still believe that with the short position present in the market by the commercial banks, the gold and silver are going to back off. I did think that we would see it possibly during the summer, but again, at this particular point, I do feel it will come when the markets are very thinly traded, and it will happen in an overnight trade. So I do see gold pulling back, but nothing ridiculous. Maybe to 1,100, maybe to 1,050. That wouldn't hurt the market in any way, shape, or form. Similar with silver. Silver is below $20 today. We saw it last week down into the $18 range. Again, if gold did drop back down to 1,100, it's feasible that silver could drop to $14.50 in that area. But again, neither market would be hurt if a short-term pullback to that level because we've been trading in those ranges, for the last 3 years now. I do believe we are going to see a massive breakout in gold also and in silver, but it's not going to come till after the markets correct themselves, after the short position is basically out of the marketplace, and we'll certainly let you know when that's going to happen. The fact is that with 1% interest rates or less, you're losing money by keeping your money in the bank. A couple of weeks ago, we came out with to discuss the article on the C-15 bill that was passed in Canada, which, amongst other things, allows for bail-ins. And we've had over 300 phone calls. I've spoken in the last 2 weeks to over 300 clients and given them advice as to what to do. Again, a bail-in is the opposite of a bailout. A bailout is what happened in 2008 when the mortgage crisis hit in the United States and all the banks got into trouble and the government came in and printed, if you remember, QE1 and QE2, and they printed trillions of dollars and bailed out all the banks and the insurance companies and General Motors and General Electric and all that. It wasn't that long ago. So that's a bailout. It's when the government takes their own money and bails out, corporations, or in this case, the banks. What a bail-in is what happened a few years ago in Cyprus. When it happened in Cyprus, and basically what a bail-in is when the banks will keep the depositors' money in order to pay the debts of the bank. It's the most ludicrous thing I've ever seen, but the fact is it did happen. So in Cyprus, we waited to see what would happen when the banks stole everybody's money, gave them worthless bank shares in this worthless bank that is going out of business, obviously, if they couldn't pay their debts, and was able to steal everybody's money and pay debts with it. Because they consider you, if you have money in a bank or a bank is paying you interest, they consider you a creditor. And the fact is that if that bank gets in trouble, they're going to take your money. And that's what happened in Cyprus. I remember Randy and I sitting back and saying, let's see how the world is going to react when the banks steal their money, and let's see what people are going to do. And lo and behold, people did absolutely nothing. They didn't break into the bank. They didn't riot. They didn't display anything. They just accepted it as it was, and things went on. The thing that was very concerning about it was that all these banks are intertwined between each other. And I think that what happened in Cyprus was really the forefront of what's going to happen pretty well all over the world. Because the fact is that with 1% interest rates, the banks aren't making any money. So in Canada, they're now going to allow for bail-ins. Now, you've got $100,000 worth of insurance on your individual bank account. So if you have $200,000 sitting in a Canadian bank and you've only got $100,000 worth of insurance and that bank gets into trouble, you're going to get $100,000 back, and they're going to steal $100,000 of your money and give you worthless bank stocks for that. You don't want that to happen. You need to understand what's happening in order for you to not fall into this trap. So basically, never keep more money in the bank than that bank has insurance for. And why would Canada's government want and allow bail-ins? The only reason that I can come up with is because they don't want to bail out the banks. If the banks were in great shape, and they can't be in great shape right now because of the real estate situation in Canada, the fact that oil is plummeted and employment is a problem, unemployment. So the fact is that you've got to be very, very careful. If you're not sure how this is going to affect you or what you can do to protect yourself, just pick up the phone and give me a call. I'll let you know exactly what you can do and what your options are. But don't just sit back and accept, like they did in Cyprus, the fact that the banks can steal your money and not do anything about it. There is something that you can do about it, and just don't let it happen. The fact is that there's negative interest rates coming. There's negative interest rates coming in bonds. There's all these things happening in the banks, and if you're not up on what you can do, you're going to be caught into a trap and lose your money. Please give me a call. Let me explain to you what your options are and how I can possibly help you get past this horrendous situation that our government put us into because they don't want to bail out the banks. They would rather steal our money and let the banks do their business that way. It's unconscionable, Randy. I just cannot believe that this was actually done. But again, 3 years ago when we saw it happen in Cyprus, we knew that this was coming.
Connect with Harold. 1-800-432-1022. The call is free. Anything discussed is 100% confidential. 1-800-432-1022. RareColoredDiamonds.com is Harold's website. RareColoredDiamonds.com. Our featured diamond of the week, and we will talk more about it in the second half, as this is a rarity for us. It's a diamond. It's a rough. It's a 2-carat rough, fancy, vivid orange. We'll talk more about that coming up in the second half of the program. And I should remind everyone, next week, September the 18th, we are going to be on at noon. The Edmonton Eskimos, Saskatchewan Roughriders are battling. Normally we're on Sunday at 3. We will be on at noon as the Eskimos play football on 6:30 CHED. Harold was talking about, obviously, banks being bailed out by governments, bailed out by, we're seeing citizens with the bail-in regimes that are taking place now all around the world. People talk about cashless societies. People are talking about negative interest rates. And it's interesting to note what's happening in Switzerland right now. Cash in a box catches on as Swiss negative rates bite. It's a sign that the world is getting used to negative interest rates when what once seemed bizarre starts to look like the norm. Consider Switzerland, where more and more companies are taking out insurance policies to protect their cash hoards from theft or damage. Because of the low interest rate level, we note increasing demand for insurance solutions for the storage of cash. That according to Philip Serholt of Zurich Insurance Group AG, among underwriters reporting a surge in such requests. We're seeing demand for coverage of sums ranging from 100 million to 500 million francs. The Swiss National Bank imposed sub-zero rates in early 2015, effectively charging banks for excess deposits. Many lenders, including UBS and Credit Suisse, have passed on at least some of the burden, they don't disclose how much, to cash-rich clients such as asset managers and big companies. While the central bank is seeking to rein in the franc, negative interest rates have side effects that over time could outweigh the benefit. That risk may be on the minds of SNB officials when they meet next week for their scheduled quarterly monetary policy review. Economists expect they will keep the rate steady at minus, you heard right, minus 0.75%, almost a negative 1%, the lowest among major central banks. The SNB's dilemma is that it can't make everyone happy, according to Alexander Koch, an economist at Rafelson Suisse. In its attempt to get the best deal for the Swiss economy, it also has created losers and collateral damage. Helvetia Holding AG says it charges about 1,000 francs a year to insure 1 million francs, a fraction of the 7,500 francs a company would pay to park the same amount in a bank for a year, assuming the lender passes on the full charge. But that amount doesn't include the cost of logistics such as transport or security features like reinforced walls, guards, and alarm systems. Companies need to save a lot on bank fees for cash storage to be economical because in addition to insurance, they have to assume the cost of managing the money. That according to Roberto Brazzini, a spokesman for Beloise Holding AG. He said the company has long offered such coverage, but there has been a noticeable increase, and now it's becoming more commonplace. This is the real kicker here at the end that I thought was simply amazing. Switzerland's continued use of high-denomination banknotes adds to the appeal of self-storage. About 1 million francs worth of 1,000 franc bills can fit into a small box. So, Harold, just absolutely stunning news out of Switzerland. You have big banks storing their money out of the banking system. They're getting insurance on it because it's cheaper than keeping it in the bank. This is absolutely amazing and stunning. And I don't know if it will eventually come to North America, but hey, anything is possible at this point. What we would say to those that are listening, you obviously have plans in place And you have different programs that you can get people investing in today to start making money right now. They're not going to be in a situation where they're in a negative interest rate environment. That's why we encourage people to connect with Harold, 1-800-432-1022 or rarecoloreddiamonds.com. But isn't that amazing, Harold? People putting cash in boxes in the negative interest rate environment in Switzerland, and the negative interest rate is minus 0.75, almost a negative 1%. Just simply stunning.
It is simply stunning, but definitely a sign of the times. And again, 3 years ago we saw bail-ins in Cyprus, and here they are now. So it's not going to take that long for it to get to North America, and all the banks do business the same way. And it should be a sign to all of us. If the Swiss banks are taking their cash out of their own banks and moving them, again, what does that tell us about the banking system in general? So, again, we deal in alternative assets. We don't deal in stocks. We do not deal in bonds. We don't deal in anything paper. All of our business and all of our assets are hard assets. Assets that you own, that you hold into your hand, and they can't be taken away from you. Not like everything else that's going on at this point. So, most of us are not sophisticated enough, to understand all the things that are going on behind the scenes with these banks and the decision makers. But the bottom line is, it's going to affect us all in an extremely negative way if we go like sheep to slaughter and let them just do whatever they want to do. There are things that we can do to take control of our own financial situation. And that's something that I've always done. And basically, we have programs that are private investment programs in my own business that we allow our Canadian clients to invest in with us. They're substantial returns. They're in American dollars, and they will definitely make you money over the short term. So basically, we want to get our money out of Canadian dollar-based investments at this particular point and put them where the strength is. And the strength right now, and will be for the foreseeable near future, is in the U.S. dollar. There is no doubt about it that the U.S. is the only country in the world that can raise interest rates at this point and wants to raise interest rates. They just want certain economic numbers to come out stronger than they have been over the summertime. But there's no doubt in my mind that we will see higher interest rates in the U.S., which is going to lead to a very, very strong U.S. dollar, and we need to take advantage of that. We need to be in the U.S. dollar because as the U.S. dollar rises and the Canadian dollar falls, we're going to make a lot of money on that. But there is going to be a time when that's going to change, when the Canadian dollar is going to strengthen again. And we will make the appropriate moves at that time. So, trading the currency markets is something that I've done for half of my life. I know the currency markets better than most. And the fact is that my clients that trade the currency markets with me in the sense of our businesses have done phenomenally well. And there's plenty of room still to make a lot of money. So give us a call. We'll explain to you what the problems are with the banking system right now in Canada, with the bail-ins, and how you can get out of that situation and into something that you'll make a lot more money in U.S. dollars.
Speak with Harold, 1-800-432-1022, or go to rarecoloreddiamonds.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 8th, 2016. Our time is 9:11 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. I should remind you, next week, we are going to be on at noon. The Eskimos playing the Saskatchewan Roughriders. So we will be on at noon prior to the pregame show and the game. Good luck to our Eskimos. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. We're on TuneIn, and we have our own YouTube page. If you would like to connect with Harold, speak with him personally and privately, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. We've talked about it in the past. You don't need to be sitting in a negative interest rate environment making no money. Harold has programs in place to help you start making money today, and he will be more than happy to speak with you confidentially about the programs he has in place. From rarecoloreddiamonds.com, our featured diamond of the week is a 2-carat rough, fancy, vivid orange. And we have never offered a rough diamond before. And as Harold was saying, even as a rough, it looks very, very beautiful. And it's funny, Harold said that to me, and I had already thought that when I saw the picture. I thought, wow, this actually looks pretty nice just even as a standalone rough. But somebody, Harold, is going to invest in that diamond. They're going to take it. They're going to have it cut. And they will have one of the world's most beautiful and rarest, fancy, vivid orange diamonds on the planet. It is a beauty.
Oh, you better believe it, Randy. I mean, this is a real treat for anybody to see a diamond like this. It only weighs 2 carats, but let's face it. It's a vivid orange diamond. It'll be cut down to right around a carat. So we'll lose half of that diamond. But the fact is that the clarity is going to turn out to be around a VS1. So when this diamond is cut, and obviously, you've got to have the vision. When you look at this rough diamond, which again, I would say most people in this world never even knew that something like this exists. This is such a rare piece of art. I mean, it is spectacular. When I held it in my hand, I just could not believe that I was holding this diamond. It's one thing for a diamond to be orange, then for it to be intense orange. But vivid orange with the highest saturation, this is the diamond that is worth a fortune. And these are the type of investments that I've been talking to you about on the show. We allow our Canadian clients to partner with us, to be our partners on these type of purchases. Then we cut and polish the diamonds. We get them graded at GIA and sell them 18 months later. We do extremely well on them, and these are all in U.S. dollars. So again, this is why for the first time we wanted to show all of our listeners what a rough diamond looks like, number one, and who would have known that it would turn out to be this amazing, fancy, vivid orange. There's maybe a handful of fancy, vivid orange diamonds in the world, and this is, again, not cut yet, but it's probably going to cut to a radiant cut, a square cut diamond. It's going to be spectacular. The color on it is so deep and so heavily saturated. This is a diamond that will sell for between $3 to $4 million a carat. That's how spectacular this diamond is. So this is what I've been talking to you about. Getting out of stocks, getting your money out of the banks where number one, now they're allowing bail-ins. Number two, you're never going to make any money keeping your money in the bank anymore because you're getting less than 1%. So if you're getting paid less than 1% a year, on top of that, you're still being taxed on that. Then on top of that, there's still inflation. You're literally losing money by keeping your money in the bank every day. However, we've got bills to pay. So you've got to keep some money in the bank in order to pay your bills, and we certainly understand that. But as far as investments goes, if you're in retirement savings plans and you put your money away for the last decade, you've made no return whatsoever. So that totally defeats the purpose of investing in a retirement savings plan. With interest rates at 1% or less, nobody can retire unless you're sitting on a whole bunch of money. And the fact is that we're living longer today. In most cases, we outlive our money, and that's a terrible thing. And a lot of us at this particular point, because of the economy, not only in Canada, but all over the world, are taking care of our children and taking care of our parents. So it's a totally different time. And totally different times, if you stick with your conventional investments, you're not going to do well. There's nobody doing well trading stocks, trading commodities, trading bonds, anything like that now, because the markets are volatile, interest rates are extremely low, and the risk in the marketplace is probably the highest it's ever been. Anybody who's trading stocks that doesn't know what they're doing, 90% of the people that trade stocks lose their money. 90%. Why in the world would we want to put ourselves in a position like that? You know, it's unfortunate because as Canadians, in most cases, we're known as hard workers. we're frugal, we take care of our money, we save our money, and we try to do the right thing. But the bottom line is it's very difficult to do that today because you can't make money keeping your money in the bank or going into stocks, not when 90% of the people are losing. So either you sit with conventional investments and say, it is what it is, and hopefully the market will come back, or you'll open up your mind to new opportunities. You look at other opportunities that are available to you and evaluate whether or not this is right for you. And that's all we're asking you to do. Take a look at the featured diamond of the week. It's something that you've never in your life seen before. Some people may have seen a rough diamond, but you've never seen a rough orange diamond, and you've definitely never seen a rough, fancy, vivid orange diamond that will sell for over $3 to $4 million a carat. This is why we're showing it to you. This is where our private investment opportunities stand at this particular point, and they are available for our Canadian clients. Again, you got to start thinking outside the box, and that's exactly what we do. We find trends in different markets, and we give these trends to our clients. We did it in gold. When gold in 1999 and everybody was losing their money in the dot-com companies back in 1999 when the NASDAQ fell from 5,000 to 1,000, we started recommending gold. Nobody was thinking about gold at that point. Gold was at $250. The U.S. dollar was at 110. Nobody was buying gold, and we went on our radio show and said, sell your stocks and get into gold. We talk about trends. The trend that we found in gold and silver made fortunes from $250 in 1999 to $1,920 by 2011. That's a trend. That's the type of trend that you catch that could make millions and millions and millions of dollars. And we know a lot of clients that heavily invested in gold and silver at the right times during that trend and made a fortune. But we also caught a trend in oil, a huge trend in oil, and we got a huge trend in currencies. And now we're bringing you a trend, not only in pink and blue diamonds, which have skyrocketed in price and will continue to do so, but now in green and orange diamonds. The new most sought-after diamonds are green and orange, and that's the trend that we're bringing to you, and you can get in on the bottom floor. So these are the opportunities available to you. Again, put your money into the bank, you're losing money every single day. Put your money into the stock market, 90% of the people that trade that lose their money. Why in the world would you want to do that when there's opportunities to make money in much more conservative ways? Again, Randy, just looking at this diamond, it's a pure treat for anybody to see something that really does not exist in this world very often, a fancy, vivid orange rough that's going to be a VS1 clarity. It's an absolute gem.
See it online, rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week. And obviously, if you were to invest in this diamond, you could work with Harold and put together a game plan of having it polished and having it cut. And then at that point, you have an investment simply that would be world-renowned. Take a look at it, rarecoloreddiamonds.com. Speak personally and privately with Harold about investing in diamonds, the different programs that he has available, 1-800-432-1022. And let's take a little look back at the first 6 months of 2016. It has been a very, very good year for diamonds. Diamonds at auction. And we will have auctions coming up here fairly soon through Sotheby's and Christie's. De Beers Blue Diamond brought in $32 million in Asia, and it was an auction record. Sotheby's sold the De Beers Millennium Jewel 4 for $31.8 million in Hong Kong. That was at the beginning of the year. Also, there was a 15-carat vivid pink diamond. It brought in $31.5 million. It set the record. It was called the Unique Pink, a 15.38-carat fancy vivid pink diamond, $31.5 million, more than $2 million per carat. That was at the Magnificent Jewels and Noble sale in Geneva. Then you had the most expensive jewel ever auctioned, the Oppenheimer Blue. That diamond sold for a history-making $57.5 million. The 14.62-carat Oppenheimer Blue, the largest fancy, vivid blue diamond ever offered at auction set a world record, and it was $57.5 million. Then we had the Aurora Green. That diamond sold for a record-breaking $16.8 million. The 5.03 carat Aurora Green diamond set two world records for the green diamond at Christie's Hong Kong Magnificent Jewel Sale, selling for $16.8 million, and then it sold for $3.3 million per carat. And then we had, and this was towards the end of, I think it was around May, 24 carat Cullinan Dream. The blue diamond sold for $25.3 million. The latest statement, blue diamonds are obviously some of the hottest around, as it sold in New York City, Christie's Magnificent Jewel Sale. The estimate on it was around $23 million. It went for $25.3 million. And Harold, on the last show, we touched on a diamond that really was very, very legendary, because it belonged to one of the great performers of all time, and we're talking about Shirley Temple. Shirley Temple was a child performer in the 30s and 40s, became an ambassador, and the story behind the blue diamond that went for auction is really one of the best that I think I've ever heard, because it takes into account that her father bought it for her, and bought it for her in 1940, and it was purchased as a birthday present. They were actually thinking that it could sell for $25 to $30 million. It had a bid of $22 million because it didn't hit that $25 million mark. It did not advance. It did not sell at auction, but it was sold privately later. So that was the other blue diamond that did sell in the first 6 months of the year. And it was an amazing story because it was purchased for around $8,000, and back in 1940, sold for over at least $25 million privately at auction. It was an outstanding first 6 months of 2016, and Harold, we cannot wait to see what happens in the second half of the year.
You bet, Randy. Again, the reason that these diamonds are selling for the prices that they are is because they're fantastic investment. People that have that kind of money to invest 57 or 30 or 25 or whatever the multi-million dollar price tag is for these gems, they don't just spend that money for the sake of spending it. They buy it because it's a great investment. And the fact is that when you look at the Shirley Temple diamond, when a diamond like that is put into the family estate and handed down from generation to generation, you're talking about a diamond that sold for under $20,000 that sold ultimately for $25 million. Those are fantasy numbers. I mean, where has anybody seen an investment like that? But it happens in the gem business. It happens in the diamond business because these are assets that are worth a fortune. They never lose their value, and over a longer term, they're the best investment you can make. There's nothing that will compare to that. You don't trade diamonds or buy diamonds for a short term. You buy them for the long term. If you don't need the money, you pass them down to your kids and grandkids. The fact is they're a phenomenal investment for retirement. They'll do way better than a retirement savings plan. Retirement savings plans lose money for 10 years in a row, and rare colored diamonds never, ever do that. So, again, we're looking at some of the best investments now. Let's face it, most people don't have $25 or $50 million to spend on a diamond or a piece of art or a classic car or whatever. But the fact is that it's not only those multi-million dollar diamonds that are going up in value. It's almost every high-quality colored diamond. Yellow flawless diamonds go up by 15% a year, but the fact is that when there's a shortage of them and there's none of them around, they'll go up way more than that. But what's wrong with making 15% a year on your money when you're making less than 1% by keeping it in the bank? And the fact is if you're your 20s, 30s, 40s, and you've got 20, 30 years to retirement, you put a diamond away, it's going to return way more to you than what your stock portfolio would or almost anything that you invest in. So again, we've got to start to think outside the box. The fact is that the investments of our father and our grandfather are no longer investments for today. Most people that trade stocks lose their money, 90%. That is a sucker's bet. There's no way in the world that we need to be in that marketplace when there's other opportunities available, and there are opportunities available, opportunities that pay in American dollars and pay way more than what you're getting in the bank or what you're going to get returned from stocks. So again, give me a call. I'll explain our programs to you and how you can possibly be my partner on that vivid orange diamond that we're showing that is a rough diamond that we'll all do extremely well with. So again, I care about my clients. You've been with me for going on 17 years now. This radio show has been on for 17 years, and my clients and listeners have been with me every single step of the way throughout my career. And this is payback. I know how difficult things are in Canada, especially in Alberta, and my clients and listeners to the show mean everything to Randy and I. We've done seminars and met many of our clients personally. And again, this is an opportunity for us to do very well for our clients and for ourselves and partner up with our clients and help them make some serious, serious money.
Speak personally, privately with Harold. The call is free. Anything discussed is confidential. 1-800-432-1022. RareColoredDiamonds.com is the website, and see our featured diamond. And just imagine what this rough diamond could turn into in the years ahead when it's polished and cut. It will be one of the most phenomenal diamonds on the planet. It's a 2-carat, rough, fancy, vivid orange. See it at RareColoredDiamonds.com, featured diamond of the week. And if you missed last week's show, we talked about, and Harold brought this to our attention, and it was brought to our attention a couple of weeks before, and it was the Bill C-15. And that was the bail-in law now in effect in Canada. It came into effect on June 22nd. The bail-in regime, which is pretty much getting to be standard around the world. In the crash of 2008, governments bailed out banks with billions of dollars. The next time around, banks will be permitted to seize your deposit and exchange them for shares in a failed bank. We have that story we can send to you if you missed it on the last show. And this one I do want to mention because I think it really points to a sense of urgency to invest with Harold into investments in the U.S. dollar. Jared Dillian, the Canadian dollar will continue to drop. The Canadian dollar is facing major headwinds. Dillian, the former Lehman Brothers trader and noted financial writer, notes it's likely that the U.S. Fed will raise interest rates at some point. The Bank of Canada will leave them where they are or cut interest rates. We saw that this week. Bank of Canada stayed pat at 0.5 point. This dynamic would put more pressure on the already weak Canadian dollar. High and rapidly growing consumer debt in Canada is also a concern, and if economic news continues to be poor like the employment numbers that came out the first week of August, you add in the fact the Canadian housing market is a concern in Vancouver. It's absolutely going bonkers in Toronto, but that can't continue forever. Dilliard thinks the Canadian dollar could move to 160 to 170 to the U.S. dollar, currently trading around 130. He believes that shorting the Canadian dollar is one of the best macro opportunities over the next couple of years. If you would like to receive this article, we can send it out to you, along with the Canadian government bail-in law, now in effect as of June 22nd, 2016. And it's interesting to note in this week's newsletter, Harold, and we encourage people to get our free weekly newsletter. It's the companion to our radio show. People can get it by connecting with Harold at RareColoredDiamonds.com or calling 1-800-432-1022. There's a very interesting article about cashless society. And here we go again. We have people that are talking about wanting to take cash out of the system. Kenneth Rogoff has written a book, and he is saying that he wants to get rid of the $100 bill because he believes It is opening up the door for tax evasion, and it causes problems when it comes to illegal activity. And he's written a book on the cashless society and how he would like to move towards that in the United States. If you would like to see that article, we can send that out to you via email free of charge in our free weekly newsletter. But Harold, negative interest rates, cashless society, you have bailouts, bail-ins. It's an absolute strange time in the world of economics, in the world of finance, not only to mention geopolitically, but we need to protect ourselves as a result.
You better believe it, Randy. It's quite frightening. And then when you read reports like today that Switzerland is moving all their, cash type of thing, well, they were the ones that are in favor of the cashless society. In actual fact, they're cashless there, so it's funny that they're moving all this cash around. It's just an unbelievably confusing time. You can't trust the banks and you can't trust the government. I mean, the Canadian government sold us down the river and allowed bail-ins. The only reason that they're going to do that is because they don't want to bail out the banks. What other possible reason could there possibly be why the government would have done that to us? It makes absolutely no sense. So the fact is that if they know that the banks are in trouble, if they know that the real estate market could crumble the banking situation, then why did they accept bail-ins? Because they don't want to accept the responsibility of bailing out the banks, and they're going to put that over to all of you. So, again, you've really got to make your own decisions. If you sit back and allow the decisions to be made for you, I can assure you, is you're going to be like a sheep going to slaughter. That's not what we do here. We take care of our clients. We've got great opportunities in alternative assets that we can allow our clients to partner up with us, to make some real money in American dollars and live a decent life. Because at this particular point, with 1% interest rates and the stock market as bad as it is, nobody's going to be able to retire unless you've gotten lucky and put away millions of dollars. So that's the way I see things, Randy. What's happening right now in Switzerland just doesn't make a lot of sense because they're, proponents of a cashless society.
Doesn't make sense at all. And one of the things you can do, though, is protect yourself. Have an insurance policy in your portfolio. We advocate hard assets. And one of the hard assets you can look at is our featured diamond of the week, 2-carat rough, fancy, vivid orange. There are programs that Harold has in place that you can start making money on right now today. Go to rarecoloreddiamonds.com, featured diamond of the week for our featured diamond. And if you'd like to learn more about the programs that Harold has, connect with him, 1-800-432-1022, 1-800-432-1022. Rarecoloreddiamonds.com is the website. Rarecoloreddiamonds.com is the website. And yes, we do realize that more than likely the Canadian dollar, if not staying where it is, will go down if the U.S. dollar goes up and they raise interest rates. But we're also realistic in knowing that in the United States, they're the least dirty shirt. They don't have a great situation going on down there. In fact, their national debt just hit $19.5 trillion. The national debt, for the first time ever this week, a little more than 7 months after hitting the 19 trillion mark, clocked in at 19.51 trillion at the end of Wednesday. The Treasury Department reported Thursday afternoon. Precise debt figures on any given day are released on the following business day. The national debt hit 19 trillion for the first time on Jan 29, and it's doubled during the time that Barack Obama has been in office. Harold, with about 30 seconds left, now is the time not to do anything. Be proactive. It's not about optimism or pessimism. It's about realism. Let's realistically take a look at what's out there and do the right thing.
You're 100% right, Randy. Again, we cannot afford to make a mistake at this particular point. There's just way too much at stake. There's a lot you need to know. If you're interested, give me a call. I'll explain all about the C-15 and what your options are. I'll explain about our partnership programs and how we allow our Canadian clients to invest with us. And again, we'll get you set on the right track. So I wish everybody a wonderful weekend and a very profitable day.
Thank you, Harold. Connect with Harold at rarecoloreddiamonds.com. Take a look at this is the first time we've ever done it, featured diamond of the week, a 2-carat rough, fancy, vivid orange. See it online, rarecoloreddiamonds.com, featured diamond of the week. Connect with Harold, 1-800-432-1022, or rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.